Good morning. It's Vijay here. Today is Wednesday, 18th of February 2026. Welcome to another episode of Pre-Market Commentary. Please forgive me, I've got a severe bad throat, and I'll try my best to be as audible as possible. So, if you look at the cartoon of today's presentation, it shows the bulls and bears are looking at the Energizer Bunny. The Energizer Bunny, in this case, is the stock market. It is doing thump, 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 and just going on and on and on. The bears are confused, and the bulls are also amazed because even the bulls would not have thought that the market will go up with so much of bad news, especially in the Indian markets and in the global markets. You have Iran and other issues, whereas in Indian market you have the RBI, you have FII selling, you have some IPOs coming up for fake IPOs coming up. Yet the secondary market is simply going up steadily. Now, even yesterday, I was mentioning yesterday morning that yesterday could be a decisive day. The bulls were able to hold on. Then things will only get better more often than not. It is not necessary that markets will keep on going up, but every fall will be awaited by the bulls who have missed this rally to go in and buy. Whereas the bears will continue to sell because they are not able to see the positivity. The positivity is very simply liquidity is coming into the market. People don't understand what market liquidity means. For instance, yesterday FIs bought about 900 crores, previous day that sold. So they wiped out what all they have sold day for yesterday. Of course, there's a large sell figure of 7,000 crores last Friday. That was because there was a global panic, but I think the panic has abated. For instance, yesterday, Indian markets opened, Nifty opened 100 points lower, but finally it bounced back more than 150 points to close at 43 points in the positive territory. Bank Nifty opened 400 points lower. From there, it went up 625 points to close at 225 points. Similar story was repeated in that. US markets, Nasdaq opened 400 points lower. Then, it closed, it bounced back into positive territory from there. Dow Jones opened 600 points intraday at the opening bell, and then it bounced back and closed around 40 points. So there too, the same pattern is there globally. Bears are very strong in the first few minutes or maybe a couple of hours. Then the bulls retrieve that. This is what I call the rug pulling. The bears are not understanding it. Even the bulls themselves are not understanding it because slowly and silently the shares are being transferred from weak hands to strong hands, and strong hands don't reveal. You do not get data from who the strong hands are and why they're buying. Now let's look at some other things. Last week, 10 days, there was a hue and cry on US 10-year yields having gone to 4.31%. They said it'll go to 5%. The economy is in crisis. But just day for yesterday, US yields were kissing 4.0 from 4.31. So that's a 7% drop, 30 basis points, which is huge, despite so much of uncertainty and negativity. Similarly, Japanese 10-year people said it has become very tricky. And you see, in the last few days, Japanese bond yields have fallen 11%, much, much more than US bond yields. So there is something happening behind the surface or beyond the what we see, and we have to respect price. And when his price is consistent, we have to respect it more than just one day's movement. Like yesterday, IT moved up, but that doesn't mean it may make a trend. Whereas overall, the market seems to be on safer ground. Of course, there can always be black swan events. There could be a Iran conflagration. Then we will have to review it. But right now, the price action is conducive towards bulls and is very harmful for the bears. And we are positioning ourselves accordingly. I mentioned about precious metals. I expected precious metals to be sold off and very volatile in this week. So what we have done is buying silver, for instance, because silver is the now focus where they hammer silver more than gold. Now, silver every day I bought about 1% extra into the portfolio. So we were about around 17% now. In the next 3 days, we'll add 1% each. So 20% will be our weightage in silver. I have seen, heard a lot of people very bearish on silver. I wish I could do another spaces to explain as to why you should not be bearish on silver, particularly, and on gold also. That silver is just starting a new bull run. a mega bull run in my opinion. I'm not advising anybody to go and buy silver, but we are buying from, we were at 13%, now we are coming to 17, from 17 now we have gone to 20%. We will go to 20% by the end of the week. So today we'll buy, tomorrow we'll buy, and day after tomorrow we'll buy, because on Monday the Chinese markets will open, and I'm sure there will be a huge difference between Chinese prices and the paper prices which are there in COMEX. End of the month is delivery month beginning, where the participants have to mention whether they are standing for delivery. I think a lot of people stand for delivery, and there will be short covering next week onwards. This week one cannot time the market exactly. One has to do SIP, which is what we are doing. So whatever you do today, I hope it is successful. Thank you for joining me.